Hey guys, welcome back to the Trading Coach Podcast. Another video episode for you today. A little bit of a different camera as I'm having some technology issues with my main one. I don't want it freezing in the middle and then I'll get mad that I have a frozen video and I can't share it with you. So I'm going with my old school camera, but expect the same old Trading Coach Podcast awesomeness. And don't worry, my face still is beautiful even if the clarity isn't as good, or maybe it'll be better since it's not as good since you can't see me. I don't know. Either way, it's going to be a fun episode. We're going to talk about return on investment. We're going to talk about edge. We're going to talk about how much profit is enough profit to be worth trading. And the conversation stems from one that I had on the platform with one of our Tier 1 trading members. Shameless plug alert. If you're interested in learning how to trade, check out our platform, www.tier1trading.com. We are recognized in Forbes magazine as being the leading innovators in trading education because of how we set up our educational program. It's not just a thing where it's like, hey, sign up and I take a course and I'm a great trader. No, it is literally a program with different supportive resources to help walk you through the journey, including trading coaches like myself and my partner, Jason Greystone. So check it out. Start with the risk-free trial membership. That way you can get on the platform and make sure it's the right fit before making any type of commitment. So let me read to you the question that our trader had, at least the last portion of the question. And I'm going to break down the different subjects and hopefully give you an answer that makes perfect sense. So the question was, again, we were talking about back testing, edge, strategy, profit, everything in that kind of realm. And the question was, maybe one more thing I struggle with, and I'm attempting to put my thoughts into words right now, right? I'm talking about return on investment. Let's stick to a 1% return on investment per year because, again, the trader was asking me, what is an edge? I'm like, well, technically, if you can make, or what is a profitable strategy? I'm like, technically, if you can make 1% profit, it is a profitable strategy. It may not be profitable enough for you to trade, but it technically is profit. So he said, let's stick to the 1% return on investment per year. It technically has an edge, to exaggerate a little. In the courses, it mentions that back testing, let's say 100 trades or 5 to 10 years, is minimum to get some sort of valid data. What if the next test that I take in the example, so the 101st trade, is a loser and the overall expectancy is now negative? Maybe I'm thinking too much into this, but if you test from the beginning of time, there could be fails in interpretation. Humans don't change that much in terms of behavior, but smart money is evolving, which means that at a point in time, the data collected isn't as meaningful. I'm not sure if you're able to address this question correctly. A 1% return on investment technically is an edge, but is there some sort of minimum return on investment, which a strategy probably has to have? Is there a round orbital number, or is it just, I don't know, random? I hope that you understand my thoughts on this question. And I did. Now let's break this answer up into a few sections because that's a lot to digest and some of you probably tuned out already. Come back. Stick with me. I'm going to make it simple. That is my gift and a curse. I got yelled at as a student for I don't know how many years for simplifying things, oversimplifying things, my teacher said. And now in trading, investing, and coaching, the simplistic way actually works better. So, take that, teacher. I'll leave your name out, not to shame you, but you know who you are. So let's start off with an edge for you guys that are brand new. An edge is a statistical advantage in the market. So basically, it's something that tells us what we're doing works. And in the case of trading, what we're doing makes profit, right? We look at this in different ways. There's profit factor, there's positive or negative expectancy. But at the end of the day, right, if you have something, if you've tested something, if it makes profit, you technically have an edge, right? 1 penny earned is technically an edge. Probably not an edge that you want to trade, but it is technically an edge. So that's what an edge is. Now, the next question that the trader asked was about, well, what if I have that sort of minimum edge and I've completed my back testing, my 100 trades, but the 101st trade is a loser and now it takes that edge from positive to negative? Right? And how do I know that my strategy is still successful? And this is a little bit of overthinking, right? Again, we want to be literal and then we want to be realistic, right? Literal is saying, hey, if you make 1 penny from the market, you technically have an edge, right? But realistically, would you trade anything if you only made 1 penny per year? Probably not. Now, maybe if you're a struggling trader and you've been used to losing and you make 1 penny at the end of the year, like, yeah, profit technically. I'm all about that, right? And as a trader in your first couple of years, man, if you can not lose money, you are on the right track. But I'm speaking of when you're in your strategy and system development phase and you've done all the numbers, you've collected all the data, and at the end of the day, it says 1 penny. Are you really ready to go live with that system or strategy? No. So we're kind of thinking about this too literally, right? Our edge should be a number that we're comfortable with. And I'll kind of get into how we figure that out later. But going back to backtesting and really going back to Trading Coach Podcast episode, I think it was 1075, where we spoke about how much data is enough data. This is why we want to test large sample sizes, right? If you're someone that tests 1 week, 1 month, even 1 year, you don't have a big enough sample size to see if what you're trading has a consistent edge or if it's random, right? Trust me, I've had random hot days, I've had random hot weeks, I've had random hot years, a little bit too much, but random hot months where things are just happening. It could be, fundamentally driven. It could be the nature of the market, but they're not sustainable. So this is why it's important that you backtest a long enough sample size, that you backtest over different conditions so you can see both the good and the bad of your strategy. You see the times where it's absolutely killing it. It's on a heater. It's on fire. You can't be stopped. You also see the time where it sucks and you're stuck in a drawdown, and you see how you bounce back from that, if you bounce back from that. Now, even with that, right, and even in starting from the beginning of time, as the trader mentioned, yes, it's true. We never know the future. And this is one of the biggest fears that traders have. It's also one of the biggest things that people say who are against backtesting, where it's like, well, past behavior and past stats and data tell us nothing about the future. And yes and no, right? Yes, right? We never know what the future is going to hold. Just because something worked in the past does not mean it's going to work in the future. I don't know what's going to work in the future. I don't know what the future is going to be like. It's the future for a reason. If we did, the government would probably collect us and be using us for some sort of black ops investigations and whatnot. The truth is, we don't know. So the question is, okay, well, how can we make the best guess? And the best guess is using past information, past behaviors to predict the future. And if you look in any other industry, whether it's food industry, whether it's government, whether it's sports, we all do the same thing. We take past data and we use that to predict the future. The thing is, we never stop collecting. So, and this is, I'm going to get weird here a little bit. As we collect present data, that present data now technically becomes past data, because as soon as the present is here and we recognize it, it is now the past, because the present is always the future, but right? But you get what I'm saying, right? The key is we want to consistently collect data. And if you're properly journaling and logging your trading, you're doing that. So yes, you have your big clump of back testing data, which is important. But as you're live trading, you're continuing to collect, you're continuing to analyze, and you're paying attention to different trends. And as we spoke about in numerous Trading Coach podcast episodes, with that growth mindset, we're always looking to adapt and adjust. We're always seeing, is my strategy performing the way that I want it to? If yes, then let it go. If no, what am I seeing? What am I finding that can make it better? Or what am I seeing? What am I finding that is hurting that strategy? And we're always making those tweaks as we go on. And that's how we can ensure that we keep our edge. It's not just, hey, I do the work once and I never do it again. Everything's going to work the same forever. You should have noticed in your backtesting that it doesn't work the same forever. And we have to keep putting in that work. This is one of the reasons that so many traders start off and then they don't make it past 5 years, because they do a lot of work in the beginning. Once they find a successful strategy, they stop doing the work. They don't know how to adjust, probably because they haven't learned how to trade correctly. They just found something on the internet and copied it. And now they're SOL, right? They're stuff out of luck when they need to make those crucial adjustments that's going to keep your strategy performing at its optimal level. So we can't fear the future. We have to trust ourselves and our ability to be able to make those proper adjustments when the future comes. Now, going back to the edge question, right? So how much of an edge is an edge, right? Is there some, round orbital number that we should have? And the answer is no, right? I wish I had one for you. That would be easy. I know everyone wants the easy answer, but the truth is there is no simple answer, right? I did a podcast, 1065, I think it was. I have it in my notes somewhere. Was it 1065? I don't know what it is at. Episode 1064. Ooh, I did not edit that out to make it seem like I knew what I was doing without going back on the internet and checking on what episode it was. Ooh, right? Where we talked about full-time trading and what is full-time trading? How much do you need? And the truth is, we are all different. We are all in different places. We are all in literally physical locations. We are all at different places. We are all in different places in our lives. We all have different responsibilities. We all have different values of money. Our lifestyle costs differently. There is no one number that is right for everyone. Like if I told someone, hey, what if I told you you can make $30,000 a year from trading? Would you be happy? Would you be sad? I'm sure some people would be out like, yes, yes, please give me that. I'm sure other people would be like, not worth my time, because we're all different. So there is no set number for everyone. It is based on you. It's kind of like supply and demand, right? Remember when we spoke about supply and demand in the Trading Unmasked workshop? I showed you guys the chart and we talked about different things and how supply influences demand and finding that equilibrium. You have to do the same thing with your life, right? What is the right return on investment that is worth your time? You have to think about it in the form of opportunity cost, right? What am I giving up to achieve this, right? If I have a job that is making $50,000 a year and my trading, I can make $10,000 a year from it, is it worth giving up $50,000 to fully invest in $10,000? Probably not, right? Vice versa, maybe it is, right? Also, freedom as well, right? How much time am I literally investing in the charts, right? If I'm someone that's investing 5 hours a day, I'm an active day trader, 5 hours a day in the chart, and I make a 2% return on the year, is it worth, I don't know how many hours that would be. I'm going to do quick math this time without editing it out, right? 5 hours a day, 30 days, 150, 1,500, 1,800. Someone check me on that. 1,800 hours a year. Man, that's a lot of hours, right? In trading, to make a 2% return, is that worth it when I can probably invest, 10 hours a year and just throw money into the S&P? Literally log on, buy, log out. 30 days later, log in, buy, log out, right? Maybe less than 10 hours a day, but is it worth that time to do so? I remember early on in my trading career when trading career and my life, my wife and I, we bought this new house, right? And one of the things that I always wanted was a big backyard, right? Never had a big backyard. I want to have a big backyard. I'm a sports guy. I'm like, I'm going to make a tennis court and a football field and a soccer pitch and everything and all these dreams. Right now it's just full of weeds and dying grass, right? But that was the initial dream. So we had this big house. We had this massive yard, right? Some of you guys have seen it on Instagram and whatnot. And I'm sitting out there on a nice day and I'm looking at it. I'm surveying it. I said, this is nice. Akil, you made it. And then like 2 weeks later, it's after we moved in, I'm like, man, we gotta mow this thing, right? And I'm as cheap as they come, right? I am frugal, right? You can tell, right? My wardrobe consists of black t-shirts and that's about it, because I can buy like a bunch of them for like $20 and I don't really need anything else because I don't really dress up for aside from like weddings and maybe one like special event a year where I gotta talk or something, right? But I say I'm gonna mow it myself. So we went ahead, we got this push mower, right? And we're mowing it. And it took 2 days. Between my wife and I, it took 2 days. Almost got attacked by a snake as well. I'm like, man, someone left a garden hose out here. And I'm like, wait a minute, oh shoot. Right? And that I might have ran away for a half a day. But anyway, it took 2 days to mow, right? And I got inside and I'm like, what could I have done that was more worth it in those 2 days? I didn't have kids at the time. Did I? No, we didn't have kids at the time, but I was still growing my business. So I was, really invested in trading and the money management and all that fun stuff. And I'm like, man, I just spent literally 10 hours doing this. Like I could have done this, and I was so behind. So the next day I decided to, that's my neighbor across the street. He came over and said, hey, I'll mow your lawn for like $30. I'm like, here, sure. And I'm talking to my business partner at the time, and I'm like, yeah, I just give the neighborhood like $35 to mow my lawn. He's like, come on, man, like we mow it ourselves. We come from the same place, like blue collar, like you mow it ourselves. And I had to explain to him, like, well, here's the thing. In the 10 hours that I could have spent mowing, I could have done this, and made this much money versus the stuff. So the time that was, the money I saved, the $30 from mowing the lawn for 10 hours, I would have made multiples of that working on my business for those same 10 hours. So that's the trade-off you have to think about, right? is the time investment worth it based off of kind of the alternatives, the opportunity cost? Now, the tricky part is this, right? And in general, when we're starting off, our requirements are a lot lower than when we're finished, meaning that like when I started as a trader, again, anything profitable is great. If I could have made 10% a year, I would be happy with that. If you gave me a strategy right now, and assuming it's the only strategy I'm trading, if it makes 10% a year, again, not worth my time investment, I guess, depending on the strategy. But we have to think bigger picture. We have to think, we talk about goals and we always do, 3-year goals, 5-year goals, 10-year goals, where you want to be in 10 years, right? I would advise that you guys do it right now. Get some paper out, right? Write down, what do you think your 10-year trading goal is? Are you going to be someone that just trades one strategy? Are you going to be someone that just trades one pair? Are you just going to trade one asset class, right? Or are you going to continue to build this portfolio? Think about it like real estate, right? If you're going to be a real estate investor, let's say you're someone that's going to be renting out and not just flipping, and you buy your first house, is that all you plan on doing? You just plan on buying one house and renting it out? Or do you plan on buying one house, renting it out, profit from that rental property goes into buying a second house, then a third house and a fourth house, and in 10 years you try to have 5, 10 houses, right? A house a year makes the money appear. A house a year makes the money appear. That's what they say, I'll tell you. Right? What is the bigger picture? Because that's going to make a massive influence, right? If you plan on only trading one strategy, one pair, and not building it at all, and that one strategy, one pair yields you a 2% return, probably not worth it. But if your bigger picture is, hey, I'm going to spread this thing out and make a 10-pair portfolio. Each of the pairs in those portfolio are going to produce 2% a year. So on an individual basis, 2%, not that big of a deal. But now all of a sudden you have 2% each on 10 pairs. You're making 20% a year. That's a whole different story. Maybe you're adding a different strategy, that other strategy with its own portfolio, that makes another 20% a year. Now you've got 40%, right? Maybe your profit goes into a different market, right? It can expand forever. But think about the big picture, because the truth is this: it's going to be very rare that you have one pair or one asset class and one strategy that makes you a 60% return, right? Edges just don't work like that. I'm sure someone out there is going to tell me it does, but in my experience of trading and strategy development, in my experience of fortunately working with some of the greatest traders in kind of my time, a little bit older than me, I don't want to put myself there yet, but in my time, none of them have told me that, hey, there's this one thing that makes 1,000,000% a year. It's all about the accumulation of small things, right? Edge, all putting it into a nice, delicious edge pie. I'm always hungry when I record these things. And that's how you create that bigger picture. It's similar to wealthy individuals. People that are wealthy tend not to be wealthy, at least self-made wealthy individuals tend not to be wealthy off of one income stream. They have maybe one thing they started with, and then they add to it, investment here, investment there, venture capitalists here, venture capitalists there, owner here, owner there. It's different things, and the accumulation of all those different streams is what brings them their wealth. Trading is the same way. It's the accumulation of very small edges coming from many different places that make the big difference. And when you look at them as an individual, not that big of a deal, but as our powers combine, boom, that's where the real profit comes from. Hope you guys enjoyed the video. I had a guy the other day ask Akil, can you send me my address because I want to send you a Christmas present. I don't need your Christmas presents. I appreciate it. I have everything that I want in the world aside from Everton being in a Champions League spot. Maybe that's a big ask. If you could do that for me, I'd appreciate it. But if you want to give me a Christmas present, here's what you do. Leave me a rating and a review, and make sure you share this podcast with your community. Seriously, hit that share button, put it on X, put it on Blue Sky, put it on YouTube, Twitter, wherever you can put it. Just put it somewhere, throw it out into the world. That way we can invite more people to the conversation, and we can keep positively influencing more and more traders each year. If you can do that, I will smile. And until next time, play and trade your plan. Take care.